Hello folks, this is Adam Zerker with the November 2014 Educational Update. Today I'm going to talk about major economic events that occurred in October and provide some insight on what they mean for you as an investor. October was a jittery month for the financial markets, though the U.S. economy continues to do quite well. Despite slowing growth in Europe and Asia, most signs point to accelerating economic growth in the United States. Let's take a look at what happened last month. Investors got their first look at third quarter economic growth and found that GDP grew a whopping 3.5% for the 3-month period ending in September. This beat economists' expectations by a pretty wide margin. Though GDP growth did decelerate from the 4.6% pace in the second quarter, the 3.5% growth marks the fourth quarter out of the last 5 where growth did come in at more than 3%. Let's keep in mind that this is only the first take of GDP for the quarter, and it will be revised. Higher or lower, we don't yet know. We won't find out until more reports come in. However, in either case, the Federal Reserve did feel good enough about the economy to make some major policy changes during the last quarter. The Fed announced that at the end of October, they would end their groundbreaking quantitative easing programs, meaning that as of the end of October, they would no longer be purchasing bonds to support the economy. However, they will continue to maintain their $4.5 trillion of bonds on their balance sheet to support the economy. Digging in a little deeper to Fed comments, we did note a bit of a hawkish tone, which means that they may raise rates sooner than originally expected. Some economists are expecting the Fed to raise rates as early as spring of 2015. Either way, we are confident the Fed will look at all of the economic data before making such a big decision. Consumers are also feeling great about their economic prospects. Consumer confidence surged in October to the highest level we've seen since October of 2007. Overall, Americans are feeling much better about their job prospects, as well as their ability to qualify for better jobs as well as higher wages. This is great news for consumer spending, especially as we head into the holiday season. The jobs report for October showed gains that were a little bit less than expected, although the unemployment rate did fall to its lowest level that we've seen since 2008. The economy created 214,000 new jobs in October, and the unemployment rate fell to 5.8%, which is now below the 50-year average rate of 6.1%. Looking ahead, investors will be focused on earnings data and growth prospects for the rest of the year. Although third quarter earnings are decent, analysts are now looking forward to guidance about fourth quarter earnings. The domestic growth picture is looking pretty rosy, but many companies are worried about slower economic growth globally. They're worried about how the strength of the U.S. dollar will affect their foreign sales. It's possible that exports will fall as they become more expensive to foreign buyers. Well, as always, we will continue to keep you informed. And again, this is Adam Zerker with Hickson Zerker Capital Management, signing off on Wednesday, November 12th, 2014. If you have any questions about anything in this video, or if you'd like to discuss your personal situation, please give us a call at 419-425-2400. We would be happy to talk to you.